Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to look at how the USE minis unfolded yesterday, which is actually Friday, March the 18th. And in particular, how we got a perfect Holy Grail trade set up on a shorter term. Actually, it was on the 2-minute ES, and that was that trade set up there. But I want to first go to the larger time frame. Because remember, for more experienced MTPredictor users, we no longer use our STF color-coded indicator, which is like any other indicator is lagging. We want to go to the higher time frame, and we normally look at our DPs on a higher time frame, but we also look at the Elliott wave patterns. A higher time frame is considered between 3 and 5 time frames higher. So if you're looking at 3 and 5 minute charts and potentially 2-minute charts, you'd go to the 15-minute chart. So this is what I've got on the ES. If you say trade Forex and you're looking at 15-minute Forex, you'll be looking at perhaps the hourly chart. And if you're trading daily stocks, for example, the weekly chart would then be the higher time frame of that. So let's have a look and see what the market did. There weren't any obvious DP resistance areas, because normally we right mouse click, go to DP, and then look at the DP levels. And as you can see here, the market did actually carry on going up through the DP area there and had 2 consecutive closes by about 11 o'clock. However, let's have a look at this pattern going up here. So I'll just take that DP off. If we right mouse click on the high here at 11:30, do Elliott wave intermediate, can you see how we had a nice looking 1, 2, 3, 4, 5, but more importantly, the high of the day, which came in at around 11:30 there, was actually at our minimum wave 5 WPT. Now normally I suggest that this is not a good enough signal to try and go short, because normally we like it to be at even higher time frame resistance, or it to be at the typical. So I don't think this would be a reason to short just because it reached the minimum wave 5 WPT, which was a pity really, because if we come down to the 3-minute chart up here around the 11:30 area, there were a couple of nice sell signals. So you might well have said, well, I want to try and take this one. If you had have done, you'd have been taken into the tick and then stopped out to the tick. Remember, trading can be frustrating, and trading will and always make losses. I'll just say that again. Whenever you're trading, there always will be losing trades. This is a fact of trading, and everyone should know and understand that. But we use correct position sizing, which varies the number of lots, contracts or shares, in this case risking less than 2% on a sample. Well, actually I'll go back to my default account there, because I was testing that with someone else. On a sample $20,000 account that would have been short 4 contracts, and the profit there would have been 3.3R. But because it was a losing trade, we call that 1 risk unit, or 1R. There was another trade set up here. Let's right mouse click on that red bar. The market would have come down to, again, the same target pretty much, and this case would have been a nice 3.4R profit. So if you were really aggressive, that might have been a good trade setup to take. But I think the better trade setup is when you expect that a high has come in. So you're looking at the 15-minute chart. After 11:30, you said, right, okay, that looks like a high on the 15-minute chart. The large view trend is now down. The better trade setup is to wait for the initial decline, which was here, and I'll wait for the initial rally, or the first correction off that initial decline. If this subdivided as a minor ABC, I'm just going to do Elliott wave minor, which it did there, then this could be a wave 2. After a wave 2, you're then anticipating a wave 3 kind of swing. So if I put the Elliott waves on here, Elliott wave intermediate, you can see the low into just before 2 o'clock, 1340, actually unfolded perfectly as a wave 3. This is the best trade setup, or one of the best trade setups in the Elliott wave patterns, because the end of the wave 2 gets you in with the smallest initial risk. The wave 3 is normally the strongest and longest wave in a completed 5-wave sequence. Therefore, this particular trade represents the largest profit potential for the smallest initial risk. Do we worry that the market then didn't go up, make a wave 4 and go back down for a wave 5? No, of course we don't. We don't use our Elliott wave in isolation in that way, and that's where I think a lot of standard and traditional Elliott wave analysis falls down, is because they try and forecast what's happening all the time. We're using Elliott wave to purely and simply pick a trading opportunity to then to have a small risk and large profit. If you had your scanner running, say for example here you had your scanner, I'll just put our day session, and you had, along with your 3 minutes, you had your 2-minute charts in there as well. There's the 2-minute charts in there as well. Then what you'd have seen is if I go down to the 2-minute chart, here was our high. Remember, that was the high we were looking at on the 15-minute chart around 11:30, so it came in just before 11:30. But here was the perfect setup. Initial decline down, initial correction back up into an ABC. This was our TS3 sell. We then right mouse click to our analysis. Remember, we're looking for a wave 3 swing, so you'd not be looking to come out at your typical wave C WPT. You'd grab and drag the risk reward, come down to your typical wave 3 WPT, which would be the area where you'd be looking to come out. And here you can see the trade setup would have been the same, nice small initial risk, but look at the profit. The profit would have been 5 times greater than the initial risk. So this is what I've nicknamed the Holy Grail trade setup, not because it has a high probability of winning, but because it allows you to enter a trade with a small initial risk, and then the profits are much larger than the losses. In other words, I think this is one of the best trades there is, because you have large profits for small losses. But do you see how I looked at this? Is that I was not trying to catch the end of the wave 5, because that was actually quite a risky trade, as I said at the beginning of the video. And this allows you to catch the first correction after you deem or you suspect that a major swing's come in. So there we suspected the major high came in on the 15-minute chart. Remember, there it was. There's our high at the minimum wave 5 WPT. So then we were looking for, not trying to sell that high, but looking for the first correction or the first move down off that, then looking for the first correction to unfold in a minor ABC, then looking for the wave 3 down. W.D. Gann also looked at this as a very good trade setup, as he said that the best place to buy or sell is on the first correction in a new trend, which in effectively Elliott wave terms is the wave 2. For you guys who are like to look at Elliott wave patterns in a bit more detail, notice how the market unfolded down here after that TS3 sell. I'll just right mouse click down here, right mouse click, Elliott wave intermediate, and look, we had the market unfold as a 1, 2, 3, 4, 5. So not only was, I'll just put this analysis back on, not only was this at the typical wave 3 WPT, so a logical place to come out, but also the wave 3 subdivided into a 1, 2, 3, 4, 5. So yet again, another reason to come out at this low. As I said, does it matter if the Elliott wave pattern falls apart after that? Of course it doesn't, because we're not looking to trade that. What we're looking to do is use Elliott wave in isolation, i.e. here, to uncover a tradable opportunity to then have a profit that's much larger than the initial risk or the losses. So a great example yesterday of how to use MTPredictor, in that first and foremost we're looking at the higher time frame chart to look for the higher time frame position. Normally we use our DPs off here to get larger degrees of support and resistance. This case we had the wave 5, but because we know wave 5s are hard to catch the end of, we weren't looking to trade the exact end of the wave 5, even though, as I demonstrated a bit earlier, if you had been very aggressive you could have actually got 2 trades off there, a loss, then a short trade to be profitable overall. But I think that was actually a little bit too risky. The one I prefer is this Holy Grail trade setup on the 2-minute chart, where we identified the high, we then looked for the initial move off that, initial correction to unfold as an ABC, then trade the wave 3. So hopefully this has been a good example to show you all how we use MTPredictor. Remember, we're not looking to trade all the trade setups. We're not looking as this is a black box system that you blindly follow. We're looking for it to identify particular patterns on the higher time frame chart, and then look to the shorter time frame chart when the picture is clear to be able to identify good trade setups. Remember the cyclical nature of trading. Markets are not clear all the time. Only about 50% of the time are clear patterns unfolding. That's why we don't suggest black box or mechanical systems that trade all the time, because we know that patterns are only clear half the time. But when they are, within that time, you then can get some lovely trade setups like this, and I think this is the best way to trade. And this Holy Grail trade setup, as I've nicknamed it, I think is one of the best trades in the book, and is why it's one of my favourite trade setups in MTPredictor. And as you can see, it caught a very nice and profitable trade on the 2-minute ES on Friday, which was the 18th of March.